Welcome back to Investing Talk podcast. We're going to be looking at Ouster today,
OUST.
OUST, a LiDAR technology company. You've sent us some pretty fascinating info about how the stock's been doing lately, what's going on in the LiDAR industry, and the market overall. So our goal is to break that all down and give you the most important takeaways from all that. We've got some technical analysis here, some recent news, and just some broader market observations to help us really get a grasp on what's happening with Ouster. We're going to look at, price movements, what's driving them, and what it all might mean for investors.
Well, it looks like a really interesting situation with Ouster because there's definitely a confluence of factors at play right now. It's
Yeah.
not just typical market volatility. There are some very specific things happening, both internally at the company and even in the global landscape that seem to be impacting its trajectory.
Yeah, so let's start with that recent stock performance. There was a pretty noticeable jump in the price, wasn't there? It closed at $8.51 on March 17th. That's up 6.78% from the previous day's close of $7.97. And it wasn't just a blip. It traded between 8.38 and 8.61 during the day, showing some real upward momentum.
Right, and that upward push becomes even more significant when you consider the context. I mean, if we kind of connect the dots here, this recent 6.78% rise on March 17th and the 13% gain it's made over the past week from that low of 753 on March 10th, that actually follows a roughly 13.3% drop from $9.81.87 back on February 18th. So it really does look like it's trying to claw its way back from a fairly substantial dip.
And that's a great point. It hasn't been a straight climb up by any means. If we pull back even further and look at the past year, the stock has traded in a pretty wide range, from a high of $13.13 in July of last year, all the way down to $6.30 in September. So the current price is somewhere in the middle of that range, seemingly trying to find its footing again. Is this recent activity a sign of strength?
I think that's the million-dollar question, isn't it? The fact that this recovery is occurring within this larger yearly range tells us that we really need to examine what's fueling this latest move and whether it has the legs to break through those previous highs.
Okay, well, let's dig into the volume then. How much trading activity was behind this price increase? The info we have suggests that the volume on March 17th was pretty substantial, which means there was real buying interest driving that price higher. There's even a comparison here to the usual daily trading volume, which is somewhere between 1 and 1.5 shares like we saw on March 13th. So there were definitely more shares changing hands.
Well, the historical pattern we see here is quite telling. When you look back, you can see that significant price jumps often coincide with a surge in trading volume. Like, take that 32.04% surge we saw back in November of 2024. It had almost 4 times the normal volume. That really illustrates how crucial volume can be in confirming whether a price move is legitimate. If the volume on March 17th was noticeably higher than average, it does lend credence to the idea that this wasn't just a random blip.
Okay, so let's get into some technical indicators. We've got a couple of key moving averages to consider. The 50-day moving average is estimated to be somewhere between $8.70 and $9, and the 200-day moving average is likely around $9.50 to $10. Right now, the stock is trading below both of those averages, but it's getting close to that 50-day MA. Remind us why these moving averages are important to watch.
Well, these moving averages often function as levels of either support or resistance for a stock's price. You can think of the 50-day moving average as representing the average price over the last couple of months. So when the current price approaches it from below, it can sometimes act as a ceiling because you have investors who bought in around that average price potentially looking to sell. The fact that Ouster is getting close to its 50-day MA indicates that it's approaching a potential obstacle. Now, if it manages to break through that, it could signal that the short-term trend is turning more positive. But if it stalls out, we might see a pullback. The 200-day MA, being a longer-term average, represents a potentially even stronger level of resistance.
And what about the relative strength index, the RSI? Looks like it's likely in the 40 to 60 range, having rebounded from potentially oversold conditions earlier this month. What does that typically tell us when the RSI is sitting in that range?
An RSI in the 40 to 60 range, particularly after rising from oversold territory below 30, generally suggests there's still room for the price to go up without being considered overbought in the short term. It means that the recent buying pressure isn't excessive yet, and could potentially continue. And this is important because when you see an RSI get really high, above 70, it can sometimes be a warning sign that a stock has risen too quickly and might be due for a correction.
We also have some specific price levels to keep an eye on. Support is around 748 to 753, which were those recent lows. Resistance at $9, which, as we just discussed, aligns with that 50-day moving average, and then further up at $9.99, which is the highest point the stock has reached this year. How should investors be thinking about these levels?
These levels are essentially potential battlegrounds for the stock price. Support levels are areas where buyers have previously stepped in, suggesting there might be some demand if the price dips back down to those points. Resistance levels, on the other hand, are areas where sellers have become active, so the stock might have trouble breaking through them. If Ouster can break above that $9 resistance level, especially if we see strong volume accompanying that move, it could suggest that buyers are really taking control, and the price might move towards that $9.99 high. Conversely, if it drops below that 750 support, it could signal that selling pressure is mounting.
Okay. And the volatility of the stock is worth noting. It has a beta of 2.37. That's pretty high. What does that mean for folks who are thinking about investing?
A beta above 1 basically tells us that a stock tends to move more drastically than the market as a whole. In Ouster's case, with a beta of 2.37, it suggests you've got to be prepared for some potentially sizable price swings, both to the upside and the downside. And that actually ties back to that wide trading range we were talking about over the past year. So if you're considering investing, you need to be comfortable with the possibility of some pretty big fluctuations in your portfolio.
All right, so that's a good overview of the technical picture. Now let's turn to the news and the market forces that might be at play here. The big one on the horizon seems to be the fourth quarter 2024 earnings report coming out on March 20th. The company has reaffirmed their revenue guidance of 29 to 31. Just how significant is this upcoming earnings announcement?
Well, earnings reports are definitely major events that can have a huge impact on stock price. Reaffirming their revenue guidance does offer a degree of stability, especially considering that they have a new CFO now. Investors are going to be watching very closely, not just to see if they hit those revenue numbers, but also to hear what the company has to say about their outlook and the potential impact of their new products.
And speaking of new products, Ouster recently launched something called 3D zone monitoring for their REV7 Digital Lidar products. Why is that an important development?
That's a really positive development because it broadens the potential applications for their LiDAR technology, particularly in things like warehouse automation and smart infrastructure. It shows that they're continuing to innovate and find new uses for their technology, which is critical to their long-term growth prospects.
We've also seen some interesting speculation online, specifically on X, about a possible U.S. ban on LiDAR companies from China. How might that benefit Ouster if it were to happen?
Well, if the U.S. government were to ban Chinese LiDAR competitors, it would significantly reduce the competitive pressure that Ouster faces in the U.S. market, which could give them a big advantage, particularly in certain segments of the LiDAR industry. This geopolitical aspect really does add an intriguing and potentially very significant dimension to the whole investment scenario.
We also noticed that the CEO made a pretty big personal investment in the company recently. A $500,000 stock purchase at $9.80 back in December. What kind of message does that send to the market when you see insider buying like that?
Well, insider buying, especially on that scale, is generally interpreted as a very positive sign. It indicates that the person with the most intimate knowledge of the company's operations and prospects believes the stock is currently undervalued and expects it to do well in the future.
Now, if we zoom out to the larger economic picture, we've seen a little bit of a rebound in the tech sector lately. And there's some anticipation that the Federal Reserve might start cutting interest rates. How do those broader market factors potentially impact Ouster?
A recovering tech sector tends to create a more favorable environment for growth-oriented companies like Ouster. And if those interest rate cuts do materialize, they could be beneficial for stock valuations across the board, because lower interest rates generally reduce borrowing costs for companies. And that can make riskier assets like growth stocks more appealing to investors.
But there's some potential headwinds, too. The info mentions possible tariff-related uncertainty under the Trump administration. What impact could that have on a company like Ouster?
Well, higher tariffs could potentially mean increased costs for the components or materials that Ouster uses to manufacture their products, which could squeeze their profit margins. It could also lead to more uncertainty in global trade and supply chains, which could indirectly impact investor sentiment toward the stock.
Let's look at what the analysts are saying based on all of this information. It seems like there's a hold recommendation from the technical analysis perspective, mostly due to those resistance levels we discussed in the upcoming earnings report.
That's a pretty cautious approach, which makes sense given all the unknowns surrounding the upcoming earnings.
Yeah. Although one source did suggest that there might be a short-term buying opportunity at the current price of $8.51, with a target price of $10 to $11 after those earnings come out. Assuming the results are strong, of course, that's some pretty nice potential upside.
Oh, absolutely. That's the potential reward if the earnings report is positive and the market responds favorably. But it also highlights the risk involved, because if the results are disappointing, the stock price could move in the opposite direction.
And the longer-term outlook seems more positive. Based on Ouster's involvement in those high-growth sectors and its potential competitive advantages.
Well, the long-term story around LiDAR technology and its expanding role across various industries does remain quite compelling. If Ouster can successfully implement their strategy and capitalize on those market opportunities, the long-term potential definitely looks promising.
There's also some advice for investors here. Some folks suggest waiting for more clarity after the earnings come out, or for the stock to break above that 50-day moving average before making a stronger commitment. Others say if the price dips below $7.50, it might be time to sell. Those seem like some good potential action points for investors to watch.
Yeah, those are sensible levels to watch as potential triggers for buy or sell decisions. A break above resistance with good volume could confirm that bullish momentum is building, while a drop below support might signal further weakness ahead.
And it sounds like there are different approaches for different types of investors. More conservative folks might want to wait for that earnings confirmation, while more risk-tolerant traders might consider buying on those dips, but with clear stop-loss levels set in place to manage that risk.
That's smart. Conservative investors often prioritize capital preservation and prefer to have more certainty before jumping in, while risk-tolerant investors are more willing to stomach bigger price swings for the chance at greater returns.
Lastly, let's touch on Ouster's position in the overall market. The data shows they operate in a pretty sizable market, estimated at around $70 billion, and spanning several different industries. They've also set some ambitious long-term financial goals, aiming for 30 to 50% annual revenue growth and gross profit margins between 35 and 40%. If they can hit those targets, that would be some pretty impressive growth and profitability.
Operating in such a large and growing market certainly creates a significant opportunity for Ouster to reach those ambitious goals.
And even though it's just mentions on social media, the fact that some major companies like Walmart, Amazon, Google, and even Tesla have been linked to Ouster, even if it's just in discussions online, does suggest that they're gaining traction and visibility in the market. It indicates that Ouster's technology is at least on the radar of some big players in these relevant industries, which is a good sign for future adoption.
So as we've seen here, the situation with Ouster is pretty multifaceted. We've examined the recent price jump, the volume driving it, and what those technical indicators are telling us. That upcoming earnings report on March 20th looks like it's going to be a pivotal event that could really determine which way the stock moves in the near term.
Yeah, the potential for Ouster to benefit from those shifts in the global landscape and its involvement in these rapidly growing markets are definitely some interesting factors to consider, alongside all the financial data. It's a good reminder that understanding a company involves looking at it from multiple angles, from the hard numbers to the broader industry trends. Hopefully, this breakdown has given you a clearer picture of the information you sent us, and we encourage you to keep these things in mind as you continue to follow Ouster's journey, especially as we get closer to that earnings announcement. And don't forget to subscribe, like, and comment if you found this analysis useful. We'd love to delve into more investment topics with you in the future.
As a final thought, consider this. Beyond the immediate stock performance, what are the broader implications of LiDAR technology becoming more widespread? How might advancements in LiDAR and falling costs fundamentally change industries like logistics, transportation, even how our cities are planned in the coming years? What role could Ouster play in that transformation? Something to ponder.